Hey everybody, Boris Lasser, BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, pound dollar for February 8th to March 3rd, 2017. And you know, you might as well have called this week Groundhog Day because everything stayed the same. When you think about the levels actually did not move. It's been extraordinarily tight volatility. But underneath this seeming calm, there's just a lot of churn going on. And the interesting thing is that the churn is really very unique to every single currency. We're not trading the pro-dollar, anti-dollar flows at all. Everybody has their own flow, everybody has their own currency, and everybody has their own direction. But underneath all of that, I think the most interesting and perhaps the most surprising aspect of it is just how weak dollar yen is, something that we've been talking about really for the last couple of weeks, relative to the fundamentals that are in front of us. Let's just take a look at the week ahead on the majors front. And well, actually, I have both the majors and the COM dollars here, but let's just take a look at the euro and the dollar story. There is definitely a lot more data this week than there was last week, but still more contained. We don't have the really big event until the week after. It's surprising. Usually the non-farm payrolls comes out first Friday of the month, but this month we have it on the second Friday of the month. I think maybe because of holidays. I'm not even sure why, but they're pushed back to the 10th. So the two critical events, perhaps the most important event, of course, is going to be the ISM non-manufacturing, because that's going to give us a very clear view as to whether the U.S. economy really is picking up steam as the Fed has been talking about. The big disconnect in the market between the fact that data has been good and the fact that Yellen has been far more hawkish than you could possibly imagine given her background, and the incredibly woefully pathetic performance of the dollar and a decline in U.S. yields at the same time. So that's sort of an interesting disconnect, and we'll see if the market, basically the market at this point was skeptical because they think the data is just not there for a rate hike, or whether the market's going to be proven wrong and we start to see a little bit more of a dollar rally as the week progresses. In the meantime, the other big event in the majors land is going to be all the UK data, the manufacturing PMI, the construction PMI, the services PMI, because here, and in many ways, I think you know, cable and UK is the canary in the coal mine, because it's the Brexit story that led the whole populist revolt in the Western world. And initially, everybody thought that Brexit was going to be just a woeful, terrible situation for UK, and it proved not to be. And yet, the skeptics and the bears could very well be proven right in the end if UK data starts to now fall off a cliff as we get closer and closer to pulling the trigger. We're going to be pulling the trigger probably within the next couple of weeks on the Brexit story. So it'll be interesting to see if the data starts to decline. I mean, one of the great rhetorical points that Prime Minister May has been scoring is that UK has been the fastest G7 economy growth in the world over the last 2 quarters. Well, that may have been premature. That simply could have been simply the boost of lower currency and to stay within the Union. Now that UK looks like it's going to exit the EU, we'll have to see just how robust the economy is. So cable, to me, looks vulnerable. Despite all of its very, very nasty rallies, it looks vulnerable to the downside. We'll discuss that in just 1 second. So let's just take a look at the levels first and foremost, and then we'll get to everything else. Still, as I said, it's really Groundhog Day. It's just the 105 support against 107 resistance in the euro, with 104 being the really, really critical support. With yen, it's not even no longer 115 level. You can't even take out the 114. And the much more important aspect is this 111.50. If that breaks, that really puts the yen much more to the downside. Goes the 110, very big target over there for the bears. And cable still really essentially trading this 23-25 zone, a little bit outside on either end. So a little bit up to the above 25s, not quite below the 23s just yet. But that zone could also get broken as the week progresses. Let's take a look at the charts here in more detail, and we can see what we're talking about. So euro is sort of in a very, very interesting position because it was a clear uptrend. The uptrend met a very, very obvious resistance at the 108. We've had this corrective wave. And now comes the moment of truth really for the euro. The euro has been very badly damaged by the fears over the French election. But really over the last 2.5 days, those fears should have started to dissipate because Macron, the centrist candidate, now has a commanding lead of about 20%, as all the left-wing candidates are now basically dropping out of the race and giving their support to him. And Le Pen, who is the populist candidate, remains at 25% hardcore, not really moving up or down. So very similar, actually, in fact, I think, with what the populist vote is across the Western world, at about a quarter of all population. But that's not enough to, in a parliamentary democracy, that's not enough to make her a winner. So therefore, that really puts the much more centrist, much more Euro-loving Macron into a winning position. Yet Euro, after absorbing all that news, still came under a pretty serious sell-off at the end of the day on Friday. And as I'm posting this, this is the Friday closes. Not a positive candle. Still, we remain relatively well boosted at this 105 level, and that's really the key. If we can just maintain a couple more days above the 105, then the whole technical construct really basically forms a higher low, which is a super bullish move and really puts us back on path towards the 108, and perhaps it really builds up a lot of force for a move towards the 110. Ironically enough, as I said, everybody who thought euro was going to parity may find themselves looking at 110 euro by middle of next quarter. So it's interesting to watch this on a technical basis. If we start breaking here, that's a very, very strong warning sign, and then just sort of the last bastion of support is this 104. That goes, then we are definitely much more on a path towards the parity level, and that means that there is something going on in the eurozone the market is far more concerned about, that may prove it right. So euro very much worth watching as the trade, because of course it has its own story. But dollar yen is the real surprise. Great U.S. data, hawkish Fed, exact opposite. Just we know we've always talked about this in technicals, that when price diverges from the fundamentals, you always trust price. And I think this is as good an example of that as possible. We really, at this point, the price really needs to prove to you that there is some sort of support here at the dollar for a dollar rally. You need to see this 1150 hold, and more importantly, I really think that to get any kind of confidence in the fact that this is a double bottom, you probably need to see 1350 on a closing basis. Until we kind of see that construct, it is not a time to buy this thing. It looks like a falling knife. It looks like it could just slice you in half should you want to try to make a bid over here. It's not a high probability trade at this point. I mean, it's an interesting punt. It's a low risk trade in the sense that you basically only have 80, 90 points worth of risk, and it's maybe worth a punt. But basically, technically, from a price action point of view, it's a very negative construct that looks like it just wants to break the wall and the avalanche. And if it does, then the move is really much more towards the 110. If it does, as a matter of fact, it's also, by the way, any kind of a remote bounce on that break is going to be an excellent place to short, not to get long. Pound dollar, my last major of the day. The interesting thing about the pound dollar, by the way, is I talked about this 23-25 range. Pound used to be a very nice volatile trade, but volatility. Look at this volatility since the beginning of February. I don't think we've seen lower volatility in cable on a monthly basis in a long, long time. This has been basically a 150-point range on a month. We used to do 150-point ranges in a day. Now, so what's ironic about this, by the way, is that you have lots of days where you do 150 points, and then you retrace those the other way, and then you go up the other way. This is maddening, absolutely maddening for anybody who tries to get any kind of directional movement out of the trade. Super great for anybody who range trades this thing. And maybe that's the story. Maybe you sort of just continue range trading this until proven otherwise. So at which point 26 is a sell, 24 is a buy, and you just keep repeating this until the range is broken, because that seems to be, I think, technically the most viable strategy for the time being. So that's how we shape up. It's a story for all seasons. Everybody's got their own narrative, and it's very, very important to actually be in touch with its own narrative. It is not a pro-dollar, anti-dollar trade. It's very much its own currency trade this week in the market, with lots and lots of undercurrents amidst what looks like low volatility structure. We're going to be watching all those levels very carefully, especially that 111.50 in the yen to the downside, and that 105 in the euro to the downside, to see how well they can hold, because that's really going to be the do or die situation as the week progresses. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.